Swayam Prabha. Digital India. Educated India.
Yogah Karmasu Kaushalam.
Hello students, welcome to module 5 of accounting for non-trading concerns. This is Dr. Raghavi from Gujarat University. In previous module 4, we have seen 5 illustrations and in each illustration different aspect is discussed. Let us have a recap of it. In the first illustration, from given information, transactions pertaining to income expenditure account were identified. Treatment of adjustments were also studied. Finally, all relevant items were disclosed at appropriate place in income expenditure account. In second illustration, we have studied disclosure of subscription in income expenditure under accrual system. This illustration explains the difference between cash and accrual system. In illustration 3, we have studied disclosure of salary in income expenditure under accrual system. This illustration explained the difference between cash and accrual system. The illustration 4 and 5, in it trial balance and adjustments were given, and from them we have prepared income expenditure account and balance sheet. Illustration 4 dealt with annual accounts of club and illustration 5 deals with annual accounts of Swami Trust Hospital. In this module, we will continue with additional illustrations covering other aspects pertaining to annual accounts of non-trading concern. In continuation of previous parts, now we will see illustration 6 onwards. Let us recollect the format of receipts and payment account and income expenditure account. On screen, you can see receipt and payment account for the year ending 31/3/2024. Please remember, receipt and payment account is a real account, thus rule of debit what comes in and credit what goes out is applicable. All receipts would appear at debit side and all payments would appear at credit side. Income expenditure account is nominal account, thus rule of debit all expenses and losses and credit all incomes and gains is applicable. All expenses would appear at debit side and all incomes would appear at credit side. Now, let us see the preparation of income expenditure account from receipts and payment account and adjustments. In such type of questions, certain points are to be kept in mind, such as 1. In receipt and payment account, cash receipts and payments of capital nature and revenue nature are recorded. Second, receipt and payment account includes receipts and payments of current year, previous year and next year. Third, during preparation of income expenditure account from receipt payment account, only receipt and payment of revenue nature are to be identified and to be recorded in income expenditure account. 4. Receipt and payment account includes receipts and payment of current year, previous year and next year, but for income expenditure account, receipts and payment of current year which are of revenue nature should only be recorded. 5. If any adjustments are given with receipt payment, their proper accounting treatment should be given. We will understand this with illustration. Let us see illustration 6. You are provided partial receipts and payment account and adjustments. Disclose these items in partial income expenditure account. Receipt and payment account for year ending 31/3/2024 is given. On the debit side, we can see the balance brought down, which is of 65,000. Then there is subscription amount of rupees 3 lakhs. Then there is donation of 20,000. Then the entry of annual function income of rupees 50,000 is given. Moving on to the payment side, we have the salary entry of rupees 1,20,000. Then there are drama expenses of rupees 50,000. Then there is general expense of rupees 30,000. After that, there is sports equipment expense of rupees 85,000. The adjustments are: 1. Subscription includes rupees 10,000 of 22-23 and 30,000 of 24-25. 2. Subscription outstanding is of rupees 5,000 of 23-24. 3. Salary includes rupees 8,000 of 22-23 and rupees 22,000 of 24-25. 4. Outstanding salary of rupees 3,000 of 23-24 is given. Let us see the solution. First of all, we will deal with adjustments. The accounting treatments would be: income expenditure account for the year ending 31/3/2024 is prepared. On the expenditure side, that is the debit side, we can see the salary is rupees 1,20,000. From it, we deduct the previous year's salary of rupees 8,000. From it, we deduct the next year's salary of rupees 22,000. In it, we will add the outstanding salary of current year of rupees 3,000. The amount recorded for salaries is 93,000. Then there is drama expense of rupees 50,000. After that, there is general expense of rupees 30,000. On the credit side, which is incomes, let us see the first entry. It is subscription amount of rupees 3 lakhs. From it, we deduct previous year's subscription of rupees 10,000. Further, we also deduct next year's subscription of rupees 30,000. In it, we add outstanding of current year of rupees 5,000. The amount recorded is 2,65,000. After that, the income recorded is annual function income of 50,000. Let us see the explanation. Subscription of rupees 3 lakhs and salary of rupees 1,20,000 amounts are inclusive of all years, current, previous and next. Second, accounting effect of subscription in receipts payment is of rupees 3 lakhs and in income expenditure account is of rupees 2,65,000. In same way, salary is of 1,20,000 rupees and of rupees 93,000 respectively. Third, donation and sports equipment are capital incomes and capital expense will not be recorded in income expenditure account. 4. Drama expense, general expense and annual function income are revenue items and are recorded in income expenditure account. Let us proceed to illustration 7. From the given information of Fitness Sports Club for the year ending 31/3/2024, prepare an income expenditure account for the year ending on that date. Receipt and payment account for year ending 31/3/2024 is given. Let us see the receipt side. The first entry is balance brought down of rupees 40,000. Then there is subscription of rupees 2,50,000. Then there is entry fees of rupees 20,000. Moving ahead, there is annual function income of rupees 50,000. Then there is sale of scrap of old sports equipment of rupees 10,000. Then there is donation for sports prizes amounting to rupees 50,000. Further, there is sale of tickets of drama. The amount is 1 lakh rupees. On the payment side, we can see there is salary of rupees 1,20,000. Then there is drama expense of rupees 50,000. After that, there is general expense of rupees 30,000. Audit fees is of rupees 10,000. Sports equipment is of 85,000. Honorarium to secretary is 25,000 rupees. Stationery printing expenses amount to rupees 20,000. Annual function expense is rupees 40,000. Bank interest expense is rupees 5,000. The tournament expense is rupees 25,000. The ground maintenance expense is rupees 30,000. The repairing expense is rupees 15,000. Sports prize distribution amounts to rupees 15,000. The balance carried down is rupees 50,000. The total of receipt and payment account is 5,20,000. The adjustments given are: subscription includes subscription of 10,000 for year 24-25. The subscription outstanding of rupees 15,000 is for year 23-24. The general expenses include prepaid insurance of rupees 2,500. The salary outstanding is of rupees 10,000. Depreciation on sports equipment is to be provided at rupees 15,000. 50% of the entrance fee is to be capitalized. The stationery stock is of rupees 1,000. Let us see the solution. You are provided receipt payment account where all cash receipts which are of capital and revenue nature and payments again which are of capital and revenue nature are recorded. This includes incomes and expenses of current, previous and next years. Second, receipt and payments of previous and next year are to be ignored. Third, from receipts and payments account, revenue incomes and revenue expenses are to be identified and to be recorded in income expenditure account. 4. Other applicable adjustments will be taken into consideration. Let us identify revenue incomes and expenses from receipt payment account. Let us start with the receipt side of the account. The first entry is to balance brought down of rupees 40,000. It will appear in opening balance sheet at the asset side. Then there is subscription of rupees 2,50,000. It is a revenue income. After that, there is entrance fees of rupees 20,000. According to the adjustment number 6, 50% will be treated as revenue income. Then there is annual function income of rupees 50,000. It is a revenue income. Further, there is sale of scrap of old sports equipment of rupees 10,000. It is again a revenue income. The donation for sports prizes of rupees 50,000 would appear in balance sheet at liabilities side. The sale of tickets of drama amounting to rupees 1 lakh is a revenue income. Let us move on to the payment side. The first entry is salary of rupees 1,20,000. It is a revenue expense. Then there is drama expense of rupees 50,000. It is also a revenue expense. After that, there is general expenses of rupees 30,000. Again, it is a revenue expense. After that, there is audit fees of rupees 10,000. It is also a revenue expense. Moving ahead, there is sports equipment of rupees 85,000. It is a capital expense and it would be appearing in the balance sheet at asset side. Then there is honorarium to secretary of rupees 25,000. Again, it is considered as revenue expense. Then there is stationery and printing expense of rupees 20,000, which is also a revenue expense. The annual function expense of rupees 40,000 is also a revenue expense. Then there is bank interest expense of rupees 5,000, which is also a revenue expense. After that, there is sports tournament expense of rupees 25,000. It is also a revenue expense. The ground maintenance expense of rupees 30,000 is also a revenue expense. Repairing expense of rupees 15,000 is also revenue expense. Sports prize distribution of amount rupees 15,000 will be deducted from donation for sports prizes because donation is received for that purpose only. The balance carried down of rupees 50,000 will appear in the closing balance sheet at asset side. Now, let us understand accounting effects of adjustments. Adjustment number 1 is subscription includes subscription of rupees 10,000 for the year 2024-25. We are preparing income expenditure account for 23-24 and it is 24-25, which is of next year and will be deducted from subscription. Second effect goes to balance sheet at liability side, subscription received in advance. The second adjustment is subscription outstanding of rupees 15,000 for year 23-24. It is outstanding of current year. Rupees 15,000 will be added to subscription. Second effect goes to balance sheet at asset side, subscription outstanding. The third adjustment is general expenses include prepaid insurance of rupees 2,500. It is payment of next year paid in advance and will be deducted from general expenses. Second effect goes to balance sheet at asset side, prepaid insurance. Fourth adjustment is salary outstanding of rupees 10,000. It is outstanding expense of current year and will be added to salary. Second effect goes to balance sheet at liability side, outstanding salary. The fifth adjustment is depreciation on sports equipment to be provided at rupees 15,000. Depreciation will be shown as expense and second effect goes to balance sheet at asset side. Rupees 15,000 will be deducted from sports equipment. Sixth adjustment is 50% of entrance fee is to be capitalized. From entrance fee of rupees 20,000, 50% will be shown in income expenditure account as revenue income and second effect goes to balance sheet because 50% is to be capitalized and thus will be added to capital fund. Stationery stock of rupees 1,000 is the seventh adjustment. It is closing stock of stationery, thus to arrive at net stationery expense, it will be deducted from total purchase of rupees 20,000, net 19,000 rupees will be expense of the current year. After having clarity about identification of revenue incomes and expenses and adjustments, finally, we will prepare income expenditure account. It is advisable to start with adjustments. We will commence with adjustments for preparation of income expenditure account. As we can see, the income expenditure account of Fitness Sports Club for year ending 31/3/2024 is prepared. Let us see the expenditures first. There is general expenses of rupees 30,000. From it, we deduct the next year expenses of rupees 2,500. The amount recorded is 27,500 rupees. The next entry is of salary of rupees 1,20,000. In it, we add outstanding of current year of rupees 10,000. The amount recorded is 1,30,000 rupees. Then we have depreciation on sports equipment amounting to rupees 15,000. The next entry is of stationery expenses of rupees 20,000. From it, we deduct closing stock of 1,000 and the amount recorded is rupees 19,000. Then we have drama expenses of rupees 50,000. After that, we have audit fees of rupees 10,000. Moving ahead, we have honorarium to secretary of rupees 25,000. The next entry recorded is annual function expenses of rupees 40,000. The bank interest expense which is recorded is rupees 5,000. The tournament expenses is rupees 25,000. Ground maintenance expense is of rupees 30,000. Repairing expense is of rupees 15,000. Going to the income side, the first entry is subscription of rupees 2,50,000. From it, we deduct previous year's subscription of rupees 10,000 and add outstanding of current year of rupees 15,000. The amount recorded is 2,55,000 rupees. After that, we have entrance fee of rupees 20,000. 50% has to be capitalized, so we deduct 50% of it, which is 10,000 rupees. The amount recorded is 10,000. Then we have annual function income of rupees 50,000. Further, there is sale of scrap of old sports equipment of rupees 10,000. Then we have sale of tickets of drama of rupees 1 lakh. The total of income side is 4,25,000 rupees. The excess of income over expenditure is 33,500 rupees. Let us study another illustration on preparation of income expenditure account and balance sheet from receipt payment account and adjustments. Illustration 8. You are provided receipt and payment account of Rishi Charitable Trust for year ending 31/3/2024 and adjustments. You are asked to prepare income expenditure account and balance sheet. The receipt and payment account of Rishi Charitable Trust for year ending 31/3/2024 is shown. On the debit side, the first entry is balances brought down of rupees 40,000. Indoor patient fees amounts to rupees 90,000. The outdoor patient fees is of rupees 20,000. The donation is of rupees 20,000. The next entry is to government aid, which is revenue, amounts to rupees 45,000. The interest on investments is of rupees 10,000. The charity show income is of rupees 35,000. The sale of old newspapers is of rupees 5,000. The laboratory income is of rupees 30,000. Moving to the payment side, the first entry is the laboratory expenses of rupees 21,000. Then there is charity show expense of rupees 19,000. Then we have purchase of medicines of rupees 42,000. The honorarium to doctors is of rupees 40,000. The salary paid is of rupees 58,000. The medicines equipment is of rupees 33,000. The periodical subscription is of rupees 6,000. Fixed deposit with SBI is of rupees 22,000. The balance carried down is of rupees 54,000. The total of receipts and payment account is rupees 2,95,000. Let us see the adjustments now. Outstanding interest on investment is of rupees 2,000. Medicine opening stock is of rupees 2,000 and closing stock is of rupees 3,500. The salary outstanding is of rupees 4,000. 7,000 rupees are payable on account of purchase of medical equipment. First, let us identify revenue incomes and expenses from receipts payment account. Let us start with the receipt side. The first entry is to balance brought down of rupees 40,000. It will appear in opening balance sheet on the asset side. Then we have 2 indoor patient fees of rupees 90,000. It is a revenue income. Then we have 2 outdoor patient fees of rupees 20,000. It is also a revenue income. The donation of rupees 20,000 is also a revenue income. Then we have the government aid, which is revenue of rupees 45,000. As given, it is considered as a revenue income. Further, we have 2 interest on investments of rupees 10,000. It is also a revenue income. We have charity show income of rupees 35,000. It is also a revenue income. Then we have sale of old newspapers of rupees 5,000. It is also a revenue income. After that, we have laboratory income of rupees 30,000. Again, it is a revenue income. Moving to the payment side, we have first the laboratory expenses of rupees 21,000. It is a revenue expense. The next entry is by charity show expense of rupees 19,000. It is a revenue expense. The third entry is purchase of medicines of rupees 42,000. It is also a revenue expense. The honorarium paid to doctors is of rupees 40,000, is also a revenue expense. The next entry is salary of rupees 58,000. It is a revenue expense. The medical equipment of rupees 33,000 is considered as capital expense. The periodical subscription of rupees 6,000 is a revenue expense. The fixed deposit with SBI of rupees 22,000 is a capital expense. The balance carried down of rupees 54,000 will appear in the closing balance sheet at asset side. Now, let us understand accounting effects of adjustments. The first adjustment is outstanding interest on investments of rupees 2,000. It is outstanding of current year and will be added to interest on investment. Second effect goes to balance sheet at asset side as interest outstanding. The second adjustment is medicine opening stock of rupees 2,000 and closing stock of rupees 3,000. To arrive at net expenses of medicines opening stock of rupees 2000 will be added to purchase of rupees 42,000 and closing stock of rupees 3,500 will be deducted and net amount of rupees 40,500 is net expense. Second effect of closing stock goes to balance sheet at asset side. The third adjustment is salary outstanding of rupees 4,000. It is outstanding expense of current year and will be added to salary. Second effect goes to balance sheet at liability side as outstanding salary. The fourth adjustment is rupees 7,000 are payable on account of purchase of medical equipment. It is outstanding amount of capital expense for purchase of equipment. In balance sheet at asset side, rupees 7,000 will be added to medical equipment. Second effect goes to balance sheet at liabilities of rupees 7,000 outstanding for medical equipment. We will commence with adjustments for preparation of income expenditure account. Income expenditure account of Rishi Charitable Trust for year ending 31/3/2024. We will begin with the expenditure side. The first entry is to medicine expenses. The opening stock is of rupees 2,000. We will add purchase of rupees 42,000 and deduct closing stock of rupees 3,500. The amount recorded is of rupees 40,500. The next entry is of salary. The salary amount is rupees 58,000. In it we add outstanding salary of current year of rupees 4,000. The amount recorded for salary is 62,000 rupees. Then we have laboratory expense of rupees 21,000. The next entry is of the charity show expense of rupees 19,000. Then we have honorarium to doctors of rupees 40,000. Periodical subscription amount of rupees 6,000 is then recorded. Moving on to the income side, we have interest on investment of rupees 10,000. In it we add outstanding of current year of rupees 2,000. The amount recorded is of rupees 12,000. Then we have indoor patient fees of rupees 90,000. The next entry is the outdoor patient fees of rupees 20,000. Then we have government aid of rupees 45,000. After that we have charity show income of rupees 35,000. Then we have sale of old newspapers amounting to rupees 5,000. After that we record laboratory income of rupees 30,000. The total of income side is 2,37,000, due to which the excess of income over expenditure amounts to rupees 48,500. In this part 5, we have studied about 1. Preparation of income expenditure account from receipts payment account. 2. Receipts payment account is real account and its rule is applicable. 3. Income expenditure account and its applicable rule. 4. Points to be considered to prepare income expenditure account from receipts payment account. 5. Illustrations with partial information for preparation of income expenditure account from receipts payment account. 6. Illustration with full information for identification of revenue incomes and expenses from receipts payment account. 7. Accounting effect of adjustments to income expenditure account and balance sheet. Now, in subsequent part 6, we will discuss other illustrations on preparation of income expenditure account from receipts payment account with different situations. Students, You are suggested to refresh your understanding about rules of preparation of received payment account and rules for preparation of income expenditure account. This understanding will put you in comfortable position to understand annual accounts of non-trading concern. Thank you for joining. We will meet again in part 6.